My name is Alicia Angela. I'm a tax compliance officer with the Manitoba Taxation, and I am joined by my colleague today, Adiola, and we will be presenting just a general overview on how retail sales tax is applicable on businesses. So I will share my screen. Okay, so this workshop, we will be discussing an general overview on how retail sales tax applies to various goods and services, when and how a business has to self-assess RST, and if the retail sales tax exemptions and documentations, as well as some of the common errors that businesses do that can be easily avoided if they have the right information. So retail sales tax is informally also referred to as provincial sales tax. You would all have seen the term PST on various invoices or on day-to-day just use. It is the same thing. A lot of people do get confused when we say RST in our conversation, but because RST is the legal term, this is what I will be using it during the presentation, but it's the same thing as PST. So there should not be any confusion in terminologies. So as most of you are already aware that RST is applied at the rate of 7% before the selling price, excluding GST. It is always paid by the end consumer. So anyone before the end consumer that is in the supply chain, so supplier, wholesaler, retailer, they're all tax exempt and they will pass on to the tax to the end consumer. The taxes as businesses that is collected are the trust funds for the province, and they are used for providing various programs and services to Manitobans. Just some general information. Businesses that provide taxable sales and services in Manitoba are required to be registered with the taxation division. So they must have a RST account. They must register with the Manitoba taxation, and they will also have that RST number where they can use it to get certain exemptions that we will go into in the next few slides. So Manitoba government does provide an exemption for small businesses where their annual threshold for taxable services is less than $30,000 in a calendar year. So if there's a small business and their taxable sales are $30,000 or less, they do not have to be registered. They do not have to charge the RST from the end consumer. But they will have to pay the RST on all of their inventory. So they will not get the resale exemption. They are required to pay it at the time of the purchase to their suppliers, and they will hence not charge in return, not charge it from their customers. The invoices that they give to the customer must state that the RST is already included in the purchase price. So the Retail Sales Tax legislation, or the Retail Sales Tax Act, is divided into two parts: acts and services, goods and services. So goods are going to be taxable by default unless there is an exemption provided in the act. So anything that is tangible, tangible as in that anything that can be touched, moved, or sensed. So for example, this computer that we're using, it is considered tangible and hence taxable. Same thing with any furniture, any piece of equipment. All of the things that are tangible are going to be taxable unless there is an exemption in the act. Some common examples for tax exempt goods are basic groceries. You all guys are probably aware that when you purchase groceries, there is no sales tax on it. Children's clothing for children under the age of 14, they're also tax exempt. Any prescription drugs, and some medical devices for people who are dealing with disability. And also, Manitoba government does provide certain exemptions for farm use machinery and equipment. So there are exemptions for farmers that there is no RST on it. On the other hand, real property, such as land or building, either they're domestic or residential, they are always going to be tax exempt. So the retail sales tax is only applicable on tangible personal property, not on the real property. There are certain exemptions that is provided in certain situations and to certain individuals. So as businesses, when you deliver a product, deliver a good to a resident to a person who is not a Manitoba resident, you will not be charging them Manitoba sales tax. Similarly, Manitoba government provide exemption to Indigenous people who reside on a reserve land, so they are also tax exempt when they are purchasing a particular product or consuming a service on a reserve land. Similarly, as businesses do get resale exemption for their inventory, so that is also a tax exempt situation. So this, when the business sells goods to residents of another province, they will not be charging them Manitoba sales tax, but it is only applicable when they are delivering the goods. So when the goods are being delivered to another province, that's when the exemption is applicable, because in that case, business will be able to retain proof that the product that they are delivering is going to be consumed outside of Manitoba. So the proof could be the invoice where it has the delivery address, the out of province delivery address, or a signed document by a common carrier that the product was delivered outside of the province. If a person from another province or country comes to Manitoba, for example, someone from the States comes here in Manitoba to one of the businesses here, they will not be able to get any sales tax exemption. Even though they're not residents of Manitoba, there is no proof that a business can retain that the product is going to be consumed outside of Manitoba. So in that case, if someone is coming to Manitoba and pick up a product or purchase a product here, then it will be treated the same as if the sale is being done to a Manitoba resident. There's also no refund provision in the legislation. So if they go back, they are not able to apply for a refund for any tax that they paid in Manitoba unless they purchased a vehicle. So for automobile, there is an exemption because vehicles are more regulated and they will have to register it into their home province. So in that case, a refund provision is available. But other than that, any other tangible product or service that is consumed or purchased in Manitoba is going to be taxable. When a business makes sales to an Indigenous person who resides on a reserve land, they do get exemption for the Manitoba sales tax. The exemption is only applicable to the Indigenous individuals and the bands. It is not applicable to incorporated businesses that are operating on a reserve land. So if a company is ABC Corporation or XYZ Limited, or if it's a band incorporated organization, then they're not eligible for a tax exemption. The exemption is only for individuals who have a valid treaty card or for bands, for First Nation bands. It's not for businesses that are operating on a reserve land. For a business to give a sales tax exemption to First Nation individual or a band, they must retain a copy of the individual's treaty card. Or if they're making a sale to a band, they must retain the name and the band number for their records. Also, they would need a copy of the invoice that will have the delivery address of the reserve, or a documentation signed by the individual or a band if they are making the delivery through a common carrier. This exemption is not applicable to First Nations who are coming to urban areas for a pickup. So if it's not on a reserve and if they come to city for pickup, even though they do have a treaty card, the exemption will not be applicable because the businesses will not be able to retain a proof that the product or a service is going to be consumed on a reserve land. So businesses can purchase inventory or products or services for resale because, again, the tax will be paid by the end consumer. So the business must be registered with Manitoba Finance to gain this exemption. When they get registered, they do get a 7-digit exemption number that needs to be provided to their supplier to suffice the exemption, and that exemption number must be on the invoice. So as long as the number is on the invoice, the supplier and the business, they are not liable. They are protected that they did not collect the PSD because the purchaser provided them with the exemption number. However, with that being said, it is the business's responsibility to ensure that the service or the product they're purchasing is tax exempt for them. There is exemption for resale that is straightforward, but not everything is tax exempt, and we will go over this in the future slides, but it is the business responsibility to know when to use their exemption number and when not. So anything that a business purchases for their own use, and by own it means for the business use, is going to be taxable. So businesses cannot use their exemption number for any purchases that they're making for their own use. So for example, if an office is purchasing new computers for their employees, because computers are going to be used for their own, for their employees, for their business use, they must pay the 7% RST to their suppliers. Similarly, if they're purchasing any piece of equipment or any furniture, any advertising material, because it is going to be consumed for business advertising, that is also taxable, and the RST must be paid at the time of the purchase. If they are purchasing it from an out of province suppliers or somewhere from out of country, and the supplier do not charge them Manitoba sales tax, then it is the business's responsibility to self-assess the 7% RST on that purchase to our office. So when they self-assess any purchases that are done from outside of the province where the supplier did not charge them the Manitoba sales tax, the business must self-assess on the total landing cost, which means that apart from the basic cost of the goods, they also have to include any currency exchange, any brokerage fees, any delivery or transportation fees, any tariff. So tariff is also taxable. The RST will be applicable on top of the tariffs, or any other associated cost that it took for that product to land in Manitoba. So everything is taxable, excluding GST. So moving on to insurances, some of the insurances are taxable in Manitoba and some are not. It is pretty straightforward. If you're a business that has purchased a taxable insurance, you will be paying RST on the premiums to the insurance company, and it is the insurance company's responsibility to collect and remit that to our office. Um, some of the examples for the taxable insurances are property in Manitoba, liability insurance, group life, or disability insurance. If you purchase anything, if some of the insured property here is here in Manitoba and some is outside of the province, there is an option to prorate the tax accordingly based on how the business finds it reasonable grounds. So for example, if a business has purchased a property insurance and they have one location in Manitoba and two is in Ontario, they can do the proration based on the number of sales. So if most of the sale, 60% of the sale is in Ontario and 40% is in Manitoba, they have the option to prorate the insurance that way, the tax on the insurance accordingly. Some examples for non-taxable insurance contracts that includes any health insurance, any coverage for property that is located outside of Manitoba, and any insurance coverage for vehicles that are registered under the Drivers and Vehicles Act. So any MPI insurance that you will claim that you will obtain for vehicles that is not PSD applicable. For charities and nonprofit organizations, it is a little bit different. There are certain tax exemptions that they can avail. So an entity is considered a charitable or nonprofit organization if they are registered as a charity under the Income Tax Act. An organization is considered a nonprofit if they are operating for the purpose other than making profit. So charities and nonprofit organizations are not required to collect RST on their sales of goods and services if the sale that they're doing is not publicly advertised. Publicly advertisement as in that they are not using any media outlet to promote their sales. However, if they have signboard on the side of the road stating there is going to be a bake sale this Sunday in the community center for a fundraising, that is fine. That is not considered public advertisement. Similarly, if they have posted a advertisement poster on the community center board or in a church, that is also fine. That is also not considered public advertisement. It's only if they are promoting it on a media outlet, for example, newspaper or radios. The sale that they're doing is not in a competition with sales made by other vendors in a similar industry. For example, a charity cannot run a full-on like a 7-Eleven retail store. The sale should not be of a commercial nature. So that means that the sale, they're either doing it for fundraising. The people who are administering the sale are all volunteers. And the products that they're selling are donations. Or if they have purchased it for fundraising, the charity has paid the tax on all of the purchases. So because that they will not be collecting the RST from the end user, the charity and the nonprofit organization, when they do these sales for fundraising, they are required to pay RST on of their purchases. So they do not get that resale exemption. If something is donated to them, then they do not have to self-assess on that particular donation if the donor has already paid the RST on it. So if they are receiving donations, they do have to ensure that the donor has paid the RST on the donation that they're giving. Otherwise, the charity and the nonprofit organization is responsible to pay it. The second part of the legislation for RST is taxable services. So the services part is opposite of the goods. So for services, all of the services will be tax exempt by default unless it is specifically stated in the Act that it is a taxable service. So the most common interpretation, the most easiest way to interpret that is that if the service is being provided to a taxable product, then the service will automatically become taxable. So for example, any repair or maintenance services provided to automobiles is going to be taxable because automobiles are taxable. Similarly, for any furniture or equipment, if you are purchasing any polishing service or any repair service to a particular equipment or to furniture, that service is going to be taxable because the purchase of furniture and equipment is taxable. Same thing for the clothing. If you are purchasing an alteration service for a clothing piece, it is going to be taxable because a purchase of clothing is taxable. For pre-written software, a good example of a pre-written software is Microsoft Suite. When you purchase Microsoft Office Suite, it is a taxable software. So any service that you will purchase in addition to that or after the purchase is also going to be taxable. So some of the examples of taxable service that are listed in the Act as taxable is short-term accommodation. So any accommodation that you will purchase through Airbnb or Vrbo or any business that are selling these services through any online platform is going to be taxable. However, seller, if they are selling it through an online platform, it is the online platform's responsibility to collect the RST on the seller's behalf and remit that to our office. The seller himself do not have to be necessarily be registered if they are only selling it through the online platforms. The short-term accommodation means the accommodation must be less than 30 days. If it exceeds 30 days, then it does not fit in the short-term accommodation definition. So at that point, it will be tax exempt. But if any accommodation is less than 30 days, then it will be taxable. Same thing for telecommunication services, photography, videography services, any dry cleaning and laundry, and computer programming services that you will purchase for any pre-written software. I did include software as a service here because as of the budget announcement for 2025, it will be taxable as of January 1st, 2026. So for now, it is tax exempt if you purchase any software as a service or any services that are on cloud-based software. Those are tax exempt for now, but they are going to be taxable as of January 1st, 2026. So I just wanted to add that in as an FYI for future reference. So all of the mechanical and electrical contracts are taxable because most of the mechanical and electrical services are provided to tangible personal property. So that will include any plumbing service, any HVAC services, any services provided to security and telecommunication systems. Those are all going to be taxable contracts. So most of the professional services are also taxable under the Retail Sales Tax Act. That includes legal services. Most of the legal services that comes under the scope of law, they are taxable with obviously certain exemptions. So for example, if a lawyer is providing immigration services, as in that they're helping a client to fill out an application to get a work permit, that does not come under the scope of law. So that is not going to be taxable. For more information on legal services, you can refer to our bulletin number 57 on Manitoba taxation website. Sorry, 56. My apologies. Bulletin number 56, legal services, with more exemptions and the details for legal service taxations. Similarly, for accounting services, most of the accounting services are taxable with certain exemptions. So for example, if an accountant is providing business planning or management services to another business, or if they're managing an investment portfolio for someone, that does not come under the scope of accounting services, so that those particular services are not taxable. Similarly, engineering and architectural design services and security and private investigation services are taxable under the Manitoba legislation. And there are bulletins for each one of them that you can refer to for more information on the Manitoba taxation website. Some examples of tax exempt services. So these services and a lot other are not listed in the Manitoba Retail Sales Tax Act, so they are tax exempt by default. Some of the examples are healthcare, as if you go to the doctor, you do not have to pay any sales tax to any of the services. Daycare services, any education and training, if you are providing any information sessions, any webinars, any seminars for educational purposes, you will not be collecting RST on those service charges. Similarly, any delivery, trucking, and courier services all by themselves are not taxable. If they will become taxable if you are purchasing something from outside, and it will outside of Manitoba, and at that point it will become part of the purchase price because you do have to self-assess on the total landing cost. But delivery and courier service all by itself is not taxable, and within the province it's not taxable. Similarly, for personal services, any hairstyling, any salon services that the businesses provide or acquire are not subject to RST in Manitoba. So as we discussed, the real property is tax exempt in Manitoba. So similarly, services provided to real property is also tax exempt. That includes installation of windows, flooring, shingles, excavation, landscaping services. Any businesses who provide these services will not be charging RST from the end user in Manitoba. So the service part of the real property services is tax exempt. However, the businesses or contractors who provide real property services must pay the RST on all of their purchases and supplies and materials, because that still remain tangible and taxable. So for example, a contractor who got a roofing contract, the contractor must pay RST on the purchase of shingles or wooden planks or any material that they need to provide that service. So in this case, the contract is the end consumer of this material because he needs that material to provide the service and to complete the contract. So they will pay the tax at the time of the purchase or self-assess if the supplier did not charge the tax at the time of the purchase, and they will not charge it from the end user because they're providing a service to a real property, and that is not taxable in Manitoba. Generally, when a business provides tax exempt services, for example, if a business is only providing real property services or any tax exempt service that we discussed, they are not required to be registered with Manitoba taxation because they will not be collecting any RST from the end user. However, there are cases or instances where they will need to register. One in particular is that if they purchase, if they're constantly purchasing material and supplies from outside of the province, and the supplier do not charge them Manitoba sales tax. If they are purchasing material for more than $800 in a calendar year, then we do advise them that they should register so they can self-assess on more frequent basis. If a business is purchasing material once in a while and it is not frequent, or they're not certain how much they will be purchasing or how frequent they will be purchasing, then there is an option for them to not register, but still self-assess using a casual return form. So we will discuss some of the common errors that our auditors, when they audit the business, come across. And these errors can be easily avoided if you have the right information. So RST, not paid when acquiring assets or goods used in the business. So most of the businesses sometimes think that they are tax exempt for all of the purchases that they make, but any purchase that they make for the business use is still taxable. So they should be paying the RST at the time of the purchase, or if not paid at the time of the purchase, they are required to self-assess. So that is something to be remembered or considered. So this also ties up to the first error, that anything that they purchase, that they use their RST number to purchase an item that is going to be used for the business itself and not for resale. So it is the business's responsibility to ensure that they are using their RST exemption number accordingly, and they are the sole responsible to know where to use it and where to not. So when a business is making tax exempt sales to certain situations or to individuals who are tax exempt, it is their responsibility to ensure that they are retaining the documentation for audit purposes. So if a business is giving a tax exemption, we need to know why this tax exemption was given. So for example, if a business is selling purchase material to another business for resale purposes, like a business-to-business transaction, um, the business must retain their 7-digit RST number on the invoice to prove that it was for resale purposes. Similarly, if they are fulfilling an order for outside of Manitoba, they must retain a copy of the invoice or the copy from the common carrier that has the out-of-province address. Same thing for sales made to farmers. If the farmer have a tax exemption, the business must retain a farm use certificate. So farmers do not get the RST exemption number from our office because they do not need to register. They do not have any taxable sales. However, they do need to provide their suppliers with a farm use certificate. So it's basically a certification that states that this purchase is made for farm use purposes, and the farmer must sign and date that. So as a business, if you are selling something to farmers and they provide you with a farm use certificate, you must attach a copy of that with the invoice and retain it for record purposes. And same thing for sales made to Indigenous individuals or bands on a reserve. You must retain a copy of their treaty card or their band name and number and the delivery address for the reserve. So this also ties back to the purchases made for the business own use. If the supplier charged you Manitoba sales tax, which they should, if the purchase is made for the business use, you cannot take an internal credit for it. So some businesses do take an internal credit because they're under the impression that it should be tax exempt for them. But if you're not certain that if something is tax exempt for the business or not, you can always contact our office, but you're not supposed to take internal credits for something that is taxable for the business. There will be situations for businesses where they are tax exempt, but the supplier is not able to give them tax exemption for some reason. So, or they were not aware that something was tax exempt and they ended up paying the RST to the supplier. And then they will have to recover that because it was tax exempt for them at the first place. So there are two ways to recover the tax paid in error. One is that a business can take an internal credit, and the second is that they can apply for a refund. So the internal credit adjustment is very simple and straightforward and is preferred by businesses, especially for smaller amounts to recover. So all you have to do is you have to deduct the amount of the RST that is paid in error from the RST that you have collected, and you will just remit the difference to our office when you're filing the return. We do not require any supporting documentation to be attached at the time of the return, but you must retain it for audit purposes. So we will look at an example for the calculation. So for example, a vendor has collected $400 of RST on their sales in a particular filing period, and they ended up paying $100 of RST in error to their supplier. So instead of remitting the $400 they have collected, they will take the $100 they have paid in error from the $400 and they will just remit $300 to our office instead of $400. So it is pretty straightforward. We do not, again, require any supporting documentations at the time of the filing. If let's say that the RST paid in error is more than the RST that a business has collected for a particular filing period, then they can just file a nil return. They will claim everything that they have collected from the end user as to fulfill that the RST was paid in error, and they will just file a nil return. They also have an option to file nil returns for a consistent period of time for, let's say, for 3 months or for 4 months. They can keep filing nil returns until they recover RST paid in error, and then they go back to their regular filings. If it is a huge amount and it is going to take them years to recover that, then in that case, we advise them that they can just file a refund claim and we will just give them a refund for the whole amount that they paid in error. So to apply for a refund, the business just has to fill out the RT6 application for refund form that is available on the Manitoba taxation website. And they will submit that to our office along with the supporting documentation. So supporting documentation will be a copy of the invoice where they paid the RST to their supplier, and they submit that to our office. And once it gets processed, we will mail a check off the amount that they are claiming for the RST. There is a timeline for that. So all internal credits and refund claims must be made within 2 years of the RST paid in error. So if you have paid RST in error as of February 4th, 2024, you have until February 4th, 2026 to claim that back. The Retail Sales Tax Act also provides a provision where you can claim RST paid for the bad debt. You can either claim it for the whole portion or it can be claimed for the portion that was not able to, the business was not able to recover. For example, if a business has sold an item for $5,000 and the 7% of RST on 5,000 is 350, and they remitted that to our office in that particular filing period. But later on, they were only able to recover $4,000 of that. So they can use this formula. It is $1,600 that is written off as bad debt divided by $5,600. That is the total sale price times $350, which is the amount of the RST remitted, which equals to $100. So they are able to claim $100 as an internal credit for bad debt. And the claim for the bad debt also has to be taken within 2 years of it being reported. If it has been more than 2 years, then unfortunately you will not be able to claim any RST back. It is the business responsibility to ensure that the filing of the return as well as the remittance is done by the due date. If our office do not receive the return and the remittance by the due date, there will be an automatic 10% penalty on the amount of the return assessed, and there will be interest as well that will be assessed on the applicable interest rate. It changes on January 1st and July 1st, and it remains consistent for that 6-month period. And the interest is compounded on monthly basis. So the more the remittance is delayed, the more interest the business will have to pay. If a business sends us a check and it bounced back, there will also be NSF fees charged by Manitoba taxation. It is advised to register for the online account on Manitoba Taxes. We will take a look on the next slide as well. But if you are registered and if you do have an online account, we also send reminders approximately 10 days before the return is due. So it is insured, and it is the business's responsibility to ensure that the remittance is done on time. This is the website, the online portal called Taxes, to file and remit Manitoba tax returns, business tax returns, I should specify. And there is an option in that online portal where you can make the payment as well and file the return for all of these tax returns for retail sales tax, health and education, corporate capital, fuel tax, etc. This is how the sign-in page looks like. I'm assuming that most of you are familiar with taxes. If some of you who are not familiar or who have their accountants or bookkeepers who do it for them, I will give you a quick demo to ensure that you are familiar with the system. It is very simple. It is very straightforward. And honestly, if you know that, you probably wouldn't even need a bookkeeper or an accountant to file the returns. So I'll just give you a quick demo. You do have to create a taxes account. If you already have an account, you can just sign in. But if you do not have an account, but you do have a RST tax account, like if you are registered with Manitoba Finance, you will just click on this option, sign up now for taxes, and you can just create an account from there. On the home page, you will have your tax accounts. If you have multiple tax accounts, you will have options. So you will click on, let's say, retail sales tax account because you want to file your RST return. So you will click on that and it will take you to this page. It will have your filing periods and it will have the option that says file now. And if let's say you want to file the April 2024 return, you will click on file now. And there will be an option for payment as well. There are 2 options. Make sure you do both. When you click on file now, it will ask you how much tax you have collected on your sales. It's line 1. You will enter the amount. And line 2 is the line for self-assessment. If you have purchased something from outside of the province or a supplier did not charge you RST at the time of the purchase, this is your time to self-assess. Like this is the place where you will self-assess that amount to our office. It is not to take internal credits. A lot of businesses think that if they put tax on, if they want to take an internal credit, that's where they will enter the amount, but it is you paying us. You are self-assessing. So once you enter the information, it will add everything up. And my apologies, this is a outdated screenshot. The estimated commission is not applicable anymore. It has been disabled as of May 1st, 2024. So my apologies for that. Now you will only see 5 lines. So just line 1, 2, your information, and it will add both of the lines and will give you an amount due. And once you file the return and make the payment, make sure that you have 2 confirmation numbers, one for the return and one for the payment. If you only have one, then that means you missed a step. Sometimes businesses prefer to make the payment through their online banking. So if they're doing that, then in that case, that's fine. They will only have one confirmation number just for the return. But if they are choosing, or if they do pay through taxes, then they should have 2 confirmation numbers. And the status would say pending for at least 1 to 2 business days, because that's the time it takes our office to process the returns and payment. And then after 1 to 2 business days, it should say completed. So for record keeping, Manitoba taxation do require businesses to keep the records and supporting documentations for at least 6 years for audit purposes. In case of any dispute or appeals or audit, you must retain the records for at least 6 years. There is no timeline provided for the retention of general ledgers, so that's why we do advise them to keep indefinitely. But if you do have to destroy them, you can contact our office and we can do a review of your tax account and we can advise you accordingly. So that's pretty much all the information that I had for you today. Here's our contact information in case for future, if you have any questions or concerns, you can always contact our office. You can also contact us here, Manitoba Tax's email address, sorry, mbtax.gov. Our response time is pretty good. We do thrive to respond within 24 hours. So if you have any questions or require any clarity, you can always call or email our office. And then that is the end of the content. Now Melanie has provided me with questions that some of you have, and I hope that this presentation answered most of them. But I do want to address a couple of them because I think you could benefit from additional information. So I have one here. It says, does a web-based software as a service application need to collect RST for in-province, out-of-province, and out-of-country customers? So as we mentioned, the software as a service is tax-exempt service for now. But so the businesses that are already providing this service or retaining or purchasing the service from other businesses do not have to collect or pay RST. But it is going to become taxable as of January 1st, 2026. So just something to keep that in mind, that all of the cloud-based and web-based software services are going to be taxable. And then I had another question that I think I should address. It says, how does this relate to an Indigenous business selling apps to entities residing on reserve territories? So as we discussed that, but I just want to ensure that entities could only be First Nation individuals who are residing on a reserve land, or the bands who are on the reserve land. If it is a corporation, even if it is band empowered or band incorporated, those entities are not eligible for tax exemption. So if you are selling any apps, if the app is software as a service or just web-based, then it is tax exempt for now. But yes, if you are, even in future, the eligible people on our reserve land are going to remain tax exempt. So I just wanted to clarify that point.
Thank you so much for the presentation, Alicia. It was super helpful. There are a couple questions that I'm hoping you can answer that were left in the Q&A. So there was one by Rami, sorry if I'm saying it wrong, but they were asking, how does the taxable goods work for nonprofit retailers like thrift stores? Any exemptions, goods or donations, and employees are a mix of volunteers and paid?
So for thrift stores, most of their purchases are not purchases, but most of the stuff that they sell are mostly donations. And so they do not have, the thrift store do not have to self-assess anything on the donations. If they are purchasing any products for sale, then they do have to pay RST. Unfortunately, there is no exemption on the purchases for the sale for thrift store. But yes, for the donations that are given to them, they do not have to pay or self-assess RST on that, and they do not have to collect it from the customers as well.
Perfect, thank you. The next question somebody asked was for online businesses, such as a profit sole proprietorship. Is it possible to receive donations? For example, open source / IT services or YouTube kinds of channels? If so, how would the taxes work / apply in this case?
So donation as in they're purchasing a service but not paying for it? Did I understand it correctly?
I'm going to assume, but whoever asked the question, if you can also feel free to unmic yourself if we're wrong. But yeah, we can assume it's not.
Okay, yes. I'm not sure if it will be considered as donation, because if your business is registered and they are purchasing a service, and if the service is taxable, we do expect the business to self-assess. Unless it's a small business which has a less than $30,000 sale in a calendar year, and someone just wants to help them by giving them something for free. In that case, they should not register, and they will be able to do that, I believe. But for the most part, I should stop sharing my screen as well. Yeah, but for the most part, we do expect them to self-assess on any taxable purchases for services and goods.
Okay, perfect. And then I think you just answered the next question, which was from Scott. It was about software as a service, if those products are subject to the same exemptions. And I think you answered that they are exempt for now, right?
Yeah, if Scott has anything other to add, I can answer that.
No, sorry, that's Scott. So when it does become taxable, will it be exempt for, like, say, the band Status Indians, or would SAS be exempt?
Yes. The exemption for First Nation individuals on our reserve land will remain the same. It is just going to become taxable for all the other people who are tax exempt now.
Right.
Yeah.
Okay.
Perfect. I'm just looking. And then Scott, I don't know if you had a second question. I think you did, but did both your questions get answered?
No, there's same flavor but different questions. Do you want me to ask them?
Yeah, you could ask them.
Okay, so business that we have is small right now, not over 30K. So wondering, would we still have to put the RST as included on the invoice for that once we reach January?
Like once you reach the threshold for 30,000?
No. So in January, if we're still under the 30,000, then will our invoices have to change to say RST is included?
Well, okay, sorry, so if you're
we have a website that we sell subscription to, right? So it's a software as a service, it's a subscription.
Oh, okay, so it's a SaaS. Okay, I see.
And we're not over the 30,000, so we would be GST exempt ourselves right now, right?
Yeah.
We don't have to register. But you said earlier for goods that you have to say that GST is included, or sorry, PST is included.
Yeah.
RST. whichever one it is.
Yeah.
Would our invoices then have to come January say that?
No, it's not applicable for the service because yeah, you're not purchasing the service. You are most likely going to provide it to the end consumer. So as of January, let's say in January 2026, you are still under the threshold. At that point, it is going to be your customer's responsibility to self-assess on your service that they purchase from you to our office, because the service is still taxable. You will although have to pay RST on all of the materials or anything that you will need to provide that service, but your customer's responsibility will be to self-assess. Does that answer your question?
I'm not sure.
Because
So
how
you said one of your earlier
Mhm.
slides said that the invoice has to say GST is included in the price if you're not
Yeah.
registered.
Just for the goods.
Just
You
for goods,
cannot say that for the service.
Okay, perfect. That
Yeah.
answers my question.
Yeah.
Okay.
Perfect, thank you. And then one question. So this is regarding RST credit. They're asking retail stores selling grocery items, do they qualify for RAY credit?
No, unfortunately, RST do not have those credits. For grocery stores, most of your items are going to be tax exempt anyways. So yeah, there will be no credits available for RST.
Okay, perfect, thank you. And this is the last question. Sorry, I'm just bombarding you with questions, but just reading the chat. So Cindy's asking, when self-assessing PST, if PST was paid but should not have been, example manufacturer, which is RST exempt, buys raw materials from retail outlets and therefore paid RST but should not have, is that credit amount indicated in the same place as the self-assessment amount to be paid? Or do we subtract the credit amount from the amount to be paid and just enter that one?
No, so it will not be entered into the self-assessment line because it is the business paying us, not taking a credit. So you will just subtract it from the tax collectible and you will enter the difference in line 1.
Okay, perfect. Hopefully that answers your question, Cindy. But thank you. Yeah, that's all the questions that we have in the Q&A.
Hi, it's Scott again. I do have one more question that if I may.
Yeah.
Sorry to monopolize everything here. So again, with the SaaS, and it's subscription based. So if we have subscriptions, they're annual subscriptions, we're under the 30,000. What happens when we get over the 30,000? Then I assume we have to start charging RST on the original 30,000 too, right?
Yes. So let's say you do exceed the 30,000 threshold within 2025. We do give 1 month for the business to ensure that they are registered, and then that 30,000 will also become taxable once you get registered. No, sorry, if you have already collected it on these services that were before you were registered, that will remain tax exempt and you will start collecting it once you register. So any annual subscriptions that you will sell after you register, you will start collecting it from then. Yeah.
So existing customers that have an annual, they would then start paying the RST on their next annual payment. That's what you're saying.
That
after we cross the 30,000.
Yes, that is correct.
Okay. All right, I'm done. Thank you. Thank you very much.
Perfect. And sorry to go over your time. Just I guess there was a follow-up question on Cindy's question. How do we report the credit to your department?
Yes, so the credit, again, it is going to be subtracted from the RST that you have collected. So as we discussed in the example, so if you collected $400 and for the month of May, and you also ended up paying the RST in error of, let's say, $100, so you will just take the $100 from the $400 you have collected, and you will enter $300 in line 1, tax collectible on sales. So you do not have to tell us the explanation or give us any supporting documentation. You will do the calculation on your end and just enter the number and remit that.
Perfect. Thank you so much. I think that's it for the questions. So thank you so much to everybody who joined this webinar, and thank you also, Alicia, for having delivered this really insightful presentation. I hope everybody found it helpful. But yes, thank you for your time. And I also did include a few upcoming events in the chat box if you would like to check it out. But hopefully we will see everybody online again soon. Okay, take care, everybody.
Perfect. Thank you very much. Have a good day,
Thank
everyone.
you.
Bye-bye.